LBC News.
Mortgage borrowers have been offered some potential relief today after the Chancellor and major banks agreed measures to help ease the pain of rising interest rates. Home buyers are going to be able to switch to an interest-only mortgage for 6 months or extend their term to try and reduce their monthly payments. And lenders have also agreed to a 12-month minimum period before homes are repossessed. Jeremy Hunt says his top priority is reducing inflation.
We are absolutely committed to supporting the Bank of England, to doing what it takes. We know the pressure that families are feeling. Getting rid of high inflation for our economy is the only way that we can ultimately relieve pressure on family finances and on businesses.
This comes, of course, after the Bank of England increased its base interest rates for a 13th time in a row. And it wasn't just a quarter-point rise, it was a half-point rise yesterday to 5%. Matt Dronfield is the Managing Director of Debt-Free Advice and is joining us live here on LBC News. Thank you for your time. What do you make of what we've heard from the Chancellor today?
Well, there is some good news in this for borrowers and homeowners. As you said, the three key announcements the Chancellor said is that mortgage holders will be allowed to switch to an interest-only payments for up to 6 months that doesn't impact their credit scores. And lenders have agreed to a 12-month minimum period before repossessing homes, providing relief for those at risk of losing their homes. And borrowers can extend the term of their mortgages to move to an interest-only payment temporarily without any questions asked. Now, that is some good news, how we know just how many people this is going to affect. There's about 1.5 million homeowners that are coming to the end of a fixed deal mortgage this year and are facing the prospect of higher monthly bills. To put that into perspective, if you're on a typical tracker mortgage at the moment, you're going to be paying about £47 more a month. And those on a standard variable rate mortgage are going to be paying about £30 a month based on the average mortgage cost at the moment. And that's on top of, so many increased costs with this ongoing cost of living crisis. Debt-Free Advice has been providing free and impartial advice for over 17 years. And we've never seen so many customers turn to us in the last 6 months. In fact, just this year, we've seen over a 40% increase in the number of people coming to us with rent arrears, and a 31% of those cite low incomes as the reason for their debt. So I know it's the government's priority, and the Prime Minister has announced his 5 priorities, one of those being helping people to go into higher pay jobs. But that doesn't give any reassurance for the customers seeking our advice.
For people who do take up the offers that are being put forward here, is there a risk that this is just going to defer the pain further down the line?
That is the concern, and depends how long this crisis goes on for. If people are deferring to interest-only payments over the long term, they are going to be paying more for that mortgage repayments over the duration of their mortgage. However, what we want to get across today, because there are going to be so many people looking for support and turning to us, is around what to do right now. So if you are concerned, we encourage anybody listening today to engage with your lenders. If you're struggling with your mortgage repayments, it's important to reach out to that lender as soon as possible, because, as we've said, there's new arrangements made in place today, and all mortgage providers will want to engage with their lenders to be able to support them as well as possible. If you don't feel comfortable reaching out to your lender directly, or a bit confused about the support available, organisations like ours, Debt-Free Advice, are available to support and can negotiate with your creditor on your behalf. It's important to seek out as early as possible, because when facing any financial difficulty, the sooner you reach out, the more options that are going to be available to have. But as you say, right, the impact on mortgage payers doesn't just affect those, because at some point it's going to cascade down to those renting as well. Because with mortgage rates influencing rents and no planned support for private renters, they face escalating costs in an overheating rental market. And rent has been a growing factor, faster than wages in the UK for nearly 2 years, leaving renters to deal with ballooning costs, especially in cities like London, alongside these rising energy and food prices.
Matt Dronfield from Debt-Free Advice, thank you for joining us here on LBC News today. We have more on the measures announced today at lbc.co.uk.
LBC News.
The Prime Minister